Good afternoon, everyone. Today is Friday, January 20th, 2012. I'm going to go over the stuff we went over in the live trading room this morning. We didn't have any live ES trades or YM trades, so there's nothing to put on the blog as far as ES and YM trades go. I'm going to show you a bunch of things with different markets, but one thing I want to show you to just start off with right here is the range that we've been in. Hang on, I'm trying to minimize this. All right. You see the blue line up here and the blue line down here. This goes all the way back to yesterday. You can see right now the last bar that's printing is this one right here at 12:16 today. All the way back to 10:16 yesterday right here. Was it this bar right here? 10:16 yesterday. So for 26 hours, we've been in a 7-point range, roughly. Okay, we didn't have any trades on the ES this morning. There was one Mike R trade that set up right in here if you wanted to take it. We didn't want to take it. There was another one that set up right over here. If you wanted to take it, that would have given you a couple of points. We didn't take that one. And there was a George trade that set up this morning that gave the 2 full points as well. But we weren't taking any trades on the ES until we got out of that range. All right. That's all I have to say about the ES this morning. We were stuck at a weekly trading zone. We were just stuck. The whole thing was just stuck. The YM actually had some movement, but we weren't taking any YM trades because we were right below the zone on the ES. Okay, but the YM had a pullback right here with an entry. That gave about 40 points, I think, if not more. Yeah, that gave about 40 points. On the other side, when we had a bearish cross right here, the YM had an entry right there. Okay, that gave 618 down to 604, gave about 14 points. Okay, it's come back from there now. That was pretty much it on the YM. Okay, now let me show you a little bit of something else here. I'm going to show you, this is crude this morning, and this is just for those folks that want to see other things, that may be interested in trading markets other than the ES. I just want to show you that this is the same indicator set that we normally have on our ES 4-tick range. Okay, there's no changes to it. Nothing's different about this. The setups that we were taking this morning, that we were looking at and taking this morning, were when you break the elbow to the downside, price moves up above these lines. It's the triple trend lines. Price moves up above them, and then it closes back down below them. You can see right there. Now, this is crude. It's $10 a tick. So right here, the entry was at 98.23, and it went all the way down here to 98.02 for a 21 tick or $210 move per contract. Over here on this side, it wasn't as big of a move. It was a smaller move right here, only about 5 or 6 ticks. Right here, the same thing. Over here, another move that was smaller, using an 8-tick stop on this, or even a 10-tick stop on this to make it even $100. You would have stayed in this trade here, I think, until it moved up over here. And let's see, over here you didn't get much movement on this one. You probably would have gotten stopped out on that. It's putting together another one right here. All right, though I wouldn't recommend trading the crude right now at this time of the day. You can see I put a whole bunch of arrows in there in a bunch of different places. A couple of trades that I lost this morning. And one. And that one right there was a losing trade. That was a winning trade. But you can see I outlined a bunch of these things. We had a partner that grabbed into this one right here. This was before I started trading this morning. But he jumped into this one and he got 20 ticks out of it. And I think he jumped again over here. But he could have. I just wanted to show that and just show what this stuff looks like on different markets. All right, this is the 4-tick range chart. It's the same thing we look at with the ES. Okay, the setup is roughly the same, a little bit simpler than what we do with the ES. And I'm just going to flip over here right now. This is gold. Same exact thing, 4-tick range chart. You can see the same setups keep working over and over and over again. All right, in gold this morning, Broke the elbow to the upside, pulled back down, closed back up above, pulled back down, closed up above, pulled back down, closed up above. You can see it happening over and over again. All right, gold is an emotional market, so usually when gold starts to run, it really starts to run. You probably would have gotten stopped out right here. You could have entered it again right here on the close back up above. This one over here, you might have gotten stopped out right there, and you could have entered it again a little farther down. But I just wanted to illustrate for everyone what these other markets look like. Okay, I want to bring over the 6E for you and just show you the 6E as well. We went over some 6E stuff last night in the partners meeting, a little bit of stuff. The things that I'm showing you right now, they're not new. None of this is new. It's the same markets. I mean, not the same markets, but the same indicators, same time frame even. It's just different markets. Okay. This stuff it's out there in the workshop somewhere. I know we went over this in the workshop a while back. You know, I think I used to use a 6-tick range with the 6E instead of a 4-tick range, but I'm going to show it to you on a 4-tick range right here. Okay. Now the setup in here is pretty much the same. The ones with the box around them. Did I already show you this? I don't remember. But anyway, the ones with the box around them are losing trades. If you look at these yellow arrows, you wait till you break the elbow on the upside. Price pulls down below the MA1. Price closes back up above the MA1, and you go. All right. See right in here, it kept you out of all this stuff right in here because you broke the elbow to the downside, but price never closed back down. You broke the elbow to the upside, price never closed back up above. Broke the elbow to the downside, price never closed down. Broke it to the upside, and it didn't close up until well, it closed up right here for a little gain, but what I was looking for was more this right here. It broke to the downside, price moved up above it, and closed back down below it. We did just lose this one. Okay, Graham. Well, that is definitely something to look at, and something, this is all stuff we can discuss in next week's meeting too, in the next partners meeting. But let me back this up a little bit here so you guys can see. The yellow arrows are trades that had, they each had 4 to 6 or 8, 10, 12 ticks in them. A lot of them had a lot more than that. But if you just look at the yellow arrows, the ones with a box around them were losing trades. Okay, and these are trades that you can get into. These are trades that you can execute, and the rules are pretty well defined. There's not really any ambiguity in the rules, at least not as of yet. Okay, if we start adding too many nuances, then things can tend to get ambiguous. But what I was just looking for was something really simple for the 6E. Okay, and this is really simple. It doesn't work every time, but you can see it's the first close down below the MA1 after the elbow break, so the first close up above the MA1 after the elbow breaks. Okay, I guess this right here would have been the first close, not this one over here. And this right here would have been a short. I'm not even paying attention to the times. There are times when you probably shouldn't trade the 6E, like right now. But the market really drops off this time of the day on the 6E. But there you have it. Okay, that's what I wanted to show everyone. Though we didn't have any ES trades in the room this morning, and we didn't have any YM trades. These are things that we showed in past workshops, and we went over some similar things on the 6E last night. And we've been going over the 6E stuff, trying to nail down some simple, easy rules for everyone to follow for the past month or so on the 6E. What I just showed you is something that we've done in the past, and it's pretty straightforward and easy. This stuff right here with the this is a 50,000 contract chart. I'll change it to a 10,000. But this kind of action on the ES is hard to watch. This right here. All right. Now, when I turned the live trading room on this morning at about 7:15 Eastern time, I saw that the Globex only had about 100,000 volume on it, which was low for the Globex lately. It was low. And I saw that we were just going sideways at the time with that amount of volume. So I had sort of anticipated the ES continuing that type of action. It's been doing it, well, for 24 hours, 26 hours now. I sort of anticipated that. So I wanted to have other stuff to show everyone that was in the room. Most of the folks in the room this morning were partners, because I think most of the trial guys, this stuff, if you're not committed to the markets, then this stuff can be pretty dry to watch. All right, so I wanted everybody to see that the indicators, the setups, work across different markets. You might have to change a thing here or there, adjust your risk, adjust your target, but the setups and the indicators work on different markets, and there's always something to trade. All right. Again, this morning we took no trades on the YM or the ES. All right, so I'm going to end it with that. If anybody has any questions, Graham noted that the trades taken from inside the elbow, inside the box, have a lower probability than the trades taken from outside the box. And that's stuff that we can, we'll go over. If you're a partner, you guys can go over this stuff on your own. But we'll go over that if you want next week. On the 6E, I like the first pullback, Jeff. The question is, do you trade only the first pullback on the 6E, or do you re-enter? Not only is it the first pullback, but it's going to pull all the way on the other side of the MA1 and then get back down below it. Okay, because then you don't have to worry about the MA1 containing the price like it just did right here. Okay, if you wait for the close on the other side of it, then the MA1's not containing it. I like the first. The first is the only one that I marked up in all those charts. Okay, the first one for the 6E particularly is the only one that I marked up in all those charts. That, I think, does anybody else have any comments, or anybody want to add anything else in here? If you do, type them in, and I'll be happy to answer them. If not, then that's fine too. All right, well, I'm going to end the recording right now. You can still type in your questions, but I'm going to stop the recording right now.